Specialty Chemicals Group, AECI, reported that diluted headline earnings per share rose to 264 cents for the 6 months to the end of June 2011 from 237 cents a year ago. The company also announced a 1.2 billion rand new broad black based economic empowerment transaction, as well as plans to spend 1 billion rand to acquire 1 or 2 firms in Brazil.
AECI market cap of 10 billion, price earnings 14.2 and dividend yield 2.6. Ashraf, let's come to you first. Volumes up 2.3%, operating margin at 9.1 versus 8.9. Moving in that right direction slowly, we should perhaps
moving in the right direction slowly. They sold the sands business last year, the South African operation, which was the right move, and it's taken them a few years. But more interestingly is the strong rand has hurt their performance.
And massively. They had 750 last period. They had 688 this period. So
absolutely, as the average rate. And you know, if you just had a constant currency, then that earnings growth would have been in the region of 20 to 25%. So just the impact of a strong currency is something to take into consideration. The other thing is that, you know, despite the strong currency, there was also higher dollar prices they achieved in selling the explosives into Africa, and that has benefited them to some extent, but I think they'll see the full benefit with a weaker currency.
I actually spoke to the CEO, Graham Edwards, a little while ago, and talking about operating margins. We know that their target is actually 10% and they're sitting at 9.1%. Asked when the target is actually set for, and in fact for this year. We know that in the second half of the year they actually perform far better, but remains to be seen whether they could reach the 10% target. Are you convinced?
I don't think so. I think they're going to still struggle with the strong rand. I think that rand-dollar exchange rate may still go stronger. The whole debt bombs that are busy unfolding.
You are a stronger for longer in the rand. Correct?
Very much so. I still think that we could even see as strong as 6 if we see, you know, continual inflows of capital, which I think is going to continue, especially when your safe haven is starting to be rattled as it is. And that will keep margins under pressure. But nevertheless, the results, I think, are still good, considering that their margins have been under pressure.
I want to bring Warren Peacock on the wall with the chart. Warren, I mean, what we're seeing here is a stock that was trending up nicely, but seems to have broken some levels. Certainly, we're looking at some lower lows, didn't break the highs. We've got a chart that's looking, to my mind, a bit weak, but you're the expert here. What's your take on the AECI chart?
I think it backs up the fundamentals that you guys have been talking about. We've had a pretty strong trend for, you know, up to the beginning of 2011, and we've had some consolidation since then. I've put in 3 major support levels and resistance. That strong red line across the top is definitely giving us resistance. On the short term, we've seen a lower high, which shows a lot of weakness in the actual price chart. The short-term trend line, the blue dotted line over there, has been broken by the price, telling us on the short term that definitely the stock is weak. The target at the moment would be at around 79.50 is what I'd be looking for in the longer term. In the intermediate term, I'd be looking at 82 Rand for the share. Overall, I think that ending pattern there is bearish.
So you're looking for weakness going forward?
Yeah.
Okay, Ashraf, so let's take a look at the Sands Technical Fibers operations in the US. We saw revenue up 28%, volumes up 14%. I spoke to, as I mentioned, Graham Edwards, and he said that it is a small part of the business, that it is doing quite well, but they can't do really much to ramp operations up there.
Well, you know, my question to them will be, why a business that just earns you $4 million US a year in profits?
Yeah.
You know, why be invested in it? Because an individual entrepreneur who'd comfortably run a business like that. So it really is a case of, my view, sell it because it's not worth the trouble. It's
2.8% of revenue, as you said, absolutely no profit there. Chris, the other one, which is small for them, property, 3.3%. I mean, Tongaat really got the property story, and I think a lot of folks, but Tongaat had the right property, right place, and right time.
But the Gautrain may make a difference to AECI's properties, and because it runs through there may be an extra station that could be developed, you know, in the heart of their particular property, which could ignite development. And I think, in a sense, the urban sprawl, you know, AECI is almost like that waterfalls development north of Joburg, which is starting to be opening up those huge tracts that are just vacant. AECI is almost in a similar position. But the tax position, as far as that land needs to be resolved, it seems to be very counterproductive what the revenues.
So at the moment you're suggesting property is not exciting. They sold 2 properties. They made an operating profit of 36 million, much like the US operation. One almost says why. You're suggesting maybe it's a bit of a sleeper. And
there's a lot of, how could you say, optionality with this particular thing. In other words, you've got a standard, solid industrial operation, where margins have been under pressure because of the exchange rate. It's unlike other sectors in the stock market where margins are at record levels. And so if you're taking a contrarian view on fundamentals, you say a company that's doing well but whose margins are compressed compared to other companies whose margins are at record levels, you may want to look at a switch. Plus you've got this, you could say, embedded optionality if you can unlock. Certainly I think there's the potential for corporate action to spin that property side to different thing, because it's completely different to the industrial operation, so it makes sense to even spin that off.
Okay, well, what is your view? What do you think they should be doing on the property aspects? And we know that they are appealing the ruling, which they lost, of course, against SARS.
Absolutely. And let's not forget that in 2006, 2007, property contributed significantly to their bottom line. So, as Chris mentioned, there's optionality, but also we're in a different part of the property cycle. So that's the other reason why they got hurt. And property is not core to their business as well. So they can either take the Tongaat view, which is to sell off everything over time, or they can do the development route. But if you asked me, sell it off and make it someone else's problem. Okay,
gents, do you have any questions that you'd like to pose to our technical analyst guru?
Yeah, over the short term, it looks bearish to me, but longer term, I think one needs probably more perspective than the graph you've got.
For sure. Basically put up about 12 months of data. Yeah. There's a long-term trend that's in play. That current long-term trend line actually doesn't come in until around 75 Rand.
So that would be my suspicion, yeah.
Sure.
So Warren, for you, AECI, hot or not?
Not.
Not hot.
Ashraf?
Not at this point.
I think, longer term hot, yeah.
Longer term, so what, you'd buy and hold for longer term, or you would wait?
I would wait for these technicals to play out. In other words, for to actually have the sellout.
All right, and for you, Simon?
I betwixt in between. I think I almost like them.
What makes you almost like them?
Well, they're mining. Got to like bangs. They're mining. I mean, mining's a big deal. They got some stuff in Central Africa. They had some issues. Yeah. Perhaps we can kick in if they can get those operating margins up a little bit more. I'm going to go, go hot.
You would go hot. You would buy AECI.
I would wait for the weakness Warren's pointing to. I would look for them around the sort of the high 70s. But I think a small, and I stress the small, dabble into AECI could be an interesting way to get into the mining business.
You look perplexed. Is that a look of being perplexed or not?
No, I'm fascinated by the fact that it calls it an interesting play into the mining business.
Okay. Well, also I have to say that Graham was also very vocal about the fact that the manufacturing side of the business and the manufacturing demand is coming under pressure because of the strong currency. So they've got a double whammy there: strong currency because it's actually hurting profits, and also the demand factor.
Currency is the huge risk, and I'm with Chris. Stronger for longer on the rand.
The irony is a stronger currency helps the property side.
Yeah.
It improves the property market.
All right, let's now delve into Massmart. The company has said that it's expecting headline earnings per share of between 397 cents and 442.4 cents for the 52 weeks to the end of June. This is compared with headline earnings per share of 567.2 cents for the previous comparable period. Headline earnings per share for the Walmart costs are expected to be between 595.6 cents and 640.9 cents.
Massmart, 31 billion market cap. We've got a price earnings of 24.7. We've got a dividend yield of 2.7. Ashraf, I didn't expect the hit from the 100 million. I didn't think it would make such a difference. The market kind of just shrugged it off, and I think Walmart was up 9 cents or something yesterday. So the market was saying, well, okay, that 100 million and a bit of one-off and not a train smash.
Well, if you looked at the adjusted earnings without that 100 million, then it would have been up around 6%, 6 to 7%. So that's the way the markets looked at it. But 24p is very rich.
Very rich.
And You know, I look at that and I say,
this stock's been pricing in the Massmart deal for a long time. All those rumours.
But I think it's priced for perfection in the sense that, you know, the benefits are going to flow through almost immediately. And yes, we have seen some of the benefits when you look at television prices at Dion and Game coming down quite significantly and benefiting the consumer. But one has to see how that's going to hit the bottom line over the next 12 months.
Mergers/takeovers are never that perfect a science.
Well, this is a takeover. They don't have an operation in South Africa. They don't have management in South Africa. So it's almost business as usual for the Massmart team. But, you know, with the addition of a big brother standing behind them now, they haven't given us a view of their strategy, and I think they've been wise to date because of the Competitions Commission ruling, but one would like to see what their plans are pushing forward.
Okay, we know that government also is perhaps opposing this now, which is quite interesting, and people say that it's just going to be with far stricter terms, so it's not as if the deal's going to now fall apart. It's perhaps a bit too late. Should we be looking forward and going, okay, we know that there's been an impact here, let's look forward to potential earnings and potential scenarios as opposed to getting bogged down on these numbers?
Yeah, I think one can't be bogged down with these numbers. The market's clearly looking through these numbers, and I think that's probably right.
Because it's not being reflected in the share price negativity.
We need to appreciate it's not business as usual. There's already that little team that has arrived from the US, sitting in that little office in the back at head office that's busy growing, that's starting to fix things that aren't broken and that kind of thing. So we need to appreciate that there's a lot of alignment that still needs to take place in this particular group with the broader Walmart group. I think clearly Massmart is going to be expanding their ranges in any case so that they're competing with the food retailers a little bit more. As I've said in the past, I don't think it's a complete walk in the park for Walmart to come in. They do have incredible supply chains, etc. But this particular market is not just open for them to cherry pick. They will have to actually work quite hard in this particular market to actually make it work. Their biggest growth will be in Africa. Let's face it, it will be in Africa. And when they do the expansion, we've got to see to what extent that adds to the thing. Walmart did not buy this to bulk up. It was to get growth at the margin because of stagnation in the home market.
And it's a beachhead into it. Warren, next come to you on the wall with the chart. What we're seeing is a fair bit of consolidation from about October last year when the deal was announced. But looking at the chart the way you've done it, is we could potentially have a break up. Certainly we've got a good support around the mid-120s.
For sure. In this case, I've chosen a weekly chart. It gave us a lot smoother picture. We've had a very strong trend, obviously, from 2009 up to that price level at what's that? Can't make it out there. Sorry, guys.
What, the 140 odd.
140 odd.
Yeah.
We have a bullish chart pattern forming the red angular trend line coming downwards with the blue one almost parallel. Off support at 126. I think overall it would be a bullish pattern, but I would be looking for that price to come back first and find support once again at about the 126 level.
So a retracement in price and then a buy off that
I would think so. With
almost.
the rand, I would expect the rand to also strengthen. It's going to put a bit of pressure.
But I'd ask a question in terms of where you drew the red line. I can understand that, but you drew it at the edge of that spike. If you drew it at the close, rather, you've got a far stronger broadening pattern, which is really a reflection of uncertainty. Would you not concur rather than necessarily a bullish continuation?
Well, I think if you've got a widening trumpet where the price is actually bending downwards, you've got a retracement area, which in itself would be considered bullish.
But not,
Sorry, Ashraf, you mentioned if we take out the Walmart 6%, if we look what happened with the ShopRite's update, we got a bit pummeled, and we look at Woolies and they got loved. Okay, bad comparison, but ShopRite, Walmart, Massmart, the ShopRite really didn't like. The market looked at this and said, you know what, 6% off to Walmart, that's not a bad number. I personally would have thought maybe a little more, and that's the bottom end of their range, in fairness.
I think they're buying the potential. You know, that's the reality.
So it's buying that deal.
What they're saying is that this deal is going to deliver, and we're prepared to pay for it. My experience on deals like this is it normally takes a year and a half for the benefits to flow through. And so, if anything, I would play this as a short in my hedge fund.
Okay, so hot or not hot in
Hot for a short.
Hot for a short. That's
for
what I
a
wanted
short.
to say. So you'd be shorting Massmart, right?
I would be shorting Massmart. I think, in fact, all those food retailers are just too expensive at this point in the cycle.
You're shorting all retailers? by any
No,
chance?
not all. ShopRite was a short, but now I've replaced it with Spar.
Chris, hot or not for you?
No, it's not hot yet. I think we need to wait that year and a half before we actually say
Would you
this
also
will
be
kick
shorting
in
it?
again. I wouldn't quite be shorting it because I think there is going to be potential coming through as the investment comes through. But I'm not entirely sure whether that's correct because it already comes with quite a rich valuation.
Warren, yes.
Yes. I wouldn't say it's hot yet. I would look for it to come back to the 126 level or alternatively break 147.50 and then that ultimate target at 170 Rand if it does so.
Would you be shorting Massmart?
Yes.
Okay.
It's not hot. It's too rich. PE of 24.7. That's pricing in so much good news, and that good news is a while down the road.
Okay, before we say
And
goodbye.
no, I'm not shorting it.
Okay, you're not shorting it. Before we say goodbye to Warren, any questions that you have got?
No, I'm happy.
None? Thank you, Warren, for your views on the technical side of Massmart and AECI. Much appreciated. A big thank you to Warren Peacock from IG Markets.